This is Quantum Financial with Tim Bresky. Is a recession near within reach with the outcome of China tariffs? The signs look it could happen. Defense testing out Bitcoin. How will the government use this technology? Will it be the good or for the bad against us? These stories and more on Quantum Financial for Saturday, August 3rd. I welcome you, everyone, to August. Economics don't know when the decade-long expansion long bull run will last. These economics are watching three indicators to figure out when the recession is coming. The second quarter GDP showed the economic slowdown. This bull run has never seen runs this far up, ever since records were kept, or even in my lifetime. The longest bull run ever. Most forecasters, investors, are trying to figure out the task themselves when the next downturn will come. Economics often say that expansions don't die of old age. This is a recession are often like flipping a coin. Just because you get heads up 5 times in a row doesn't mean your next flip is more likely to be tails. Eventually, a recession will come, unfortunately. Some hints about when the end is near the end. If you know what to look for, here is one thing that has happened and will slow down the economy. The Federal Reserve lowered interest rates for the first time since the Great Recession. Unlikely, but not unrealistic, that a recession has begun. And we just know it just yet. Historically, the best forecasters have been able to do a guess, best guess only, of when a recession will happen. The only way economic forecasters have been able to do is to recognize when the recessions, once they're here. The dream of an early warning statement is still not there yet. But the University of George Washington is working on that. Here is the first indicator of recession keys. The unemployment rate. Rapid increase from a low level. Our economy rate is near a 50-year low, but does not matter in the change. When the unemployment rate rises quickly, the recession is almost certainly on the way or has already arrived, or even a small increase are significantly. Compared to the current unemployment rate to its low point over the previous 12 months, both are measured using a 3-month average to smooth out the short-term bumps. When the gap hits 0.3% points, the risk of a recession are elevated at a 0.5 percentage point. The downturn has probably already begun. Unemployment is considered a lagging indicator and is unlikely to be the first place to pick up the signs of trouble. When it lags in timeless, it makes up for it in reliability. The unemployment rate also spikes in a recession, and it rarely rises within one, which is why the unemployment rate should be a source of good indicators. Not only is it low, it's trending down. There is less than a 1 in 10 chance of a recession within a year. Indicator number 2, the yield curve. Interest rates on a 10-year Treasury bond falling below those of a 3-year month bonds. It has already happened. What it is saying is a storm warning is coming. Just a warning, the yield curve is less than the instrument that an unemployment rate is, but historically have been among the best tools of recession is near. The fundamentals are straightforward. The curve is showing the difference between the interest rate on the short term and the long-term government bonds. When a long-term interest rate falls below short-term ones, the yield curve is said to be inverted. A yield curve is a measure of how confident investors are in the economy. In normal times, they will be higher interest rates in return for tying up their money for long periods. When they get nervous, they are willing to accept lower interest rates in return for safety bond offers. Don't panic. The yield curves mean less than it used to, partly because the Fed was, until recently, raised short-term interest rates, even for a huge holdings of bonds. In any case, the recession has taken as long as 2 years for a recession to follow a yield curve inverted V in the past. Indicator number 3, the ISM Manufacturing Index. What to look for in the index falling below 45 for an extended period. This graph is mostly showing cloudy forecasts. Every month, the ISM, known as the Instrument for Supply Management Survey, purchasing managements at a major manufacturer about one company's orders, inventories, hiring. Reading of 50 or above indicates that the manufacturer selector is growing. Below 50 means it is contracting. The ISM has some advantages. It is rebalanced early, often on the first day of the lesser one. Most likely a lot of economic data, but it doesn't get revised. The ISM is a true leading indicator. Historical shows signs of trouble before the broader economic hits. Manufacture no longer drives the American economy, which means the sector doesn't guarantee a recession. The ISM index fell below 50 several months in 2015 and 2016, for example. Signals an industrial recession has never turned into a real thing. Steps downward in manufacturers tend to be a sign of trouble. It is rare for the index to fall much below 45 within a recession hitting. The American manufacturers are hitting by global slowdown by the trade tensions. The index is still in expansion mode. Number 4 indicator, consumer sentiment, declines of 15% or more over a year. This graph is showing a cloudy forecast. Consumers drive the economy more than ever before. It is impossible for the economy to keep growing if the Americans decide to keep their wallets closed. By the time spending slows, the recession has already came underway. The CS provides insight into how consumers will spend in the future. The CS are volatile from month to month. They sometimes drop sharply as consumers react to the stock market, political events. These declines often and don't translate into real change in spending. The consumer index isn't in trouble. Consumer confidence is basically flat compared to a year ago, when it has fallen since last year. The real story is no single indicator can tell you the whole story of the $21 trillion the U.S. state economy. The measures that performed well in the past year might not do so in the future. It pays to keep an eye on a variety of data sources. Keep informed and always know what or could happen. Don't be out of the know, be in the know at all. Is the Department of Defense experimenting blockchain for security messaging? I wouldn't put anything past the government. By reading an article I came across, it looks like the U.S. government defense is experimenting with blockchain to create a more efficient security network for the U.S. military, and they call it unhackable. In a document I came across, which you see now, it has filed in the mid-July. The U.S. Department of Defense is exploring a range of possibilities using for cloud, Internet and Things, and quantum computing technology. The department is looking into blockchain for transmitting secure messages and processing transactions. The documents DoD Digital Modernization Strategy that says exploring blockchain could add the department ongoing search for unpacking code. The technology could be used to create traps to offend intelligence on hackers who try to break into the security database. For quantum computing, it is likely to be cryptographic, a highly advanced for most applications for the technology to set up transactions in the case of a hacker attempts. This technology could allow someone to eavesdrop on the attackers and discover their identity. It finally went on as far as suggests that the blockchain inverts the cybersecurity paradigm. The report of what I read seems to be particularly interesting in two key factors of the technology. First, blockchain networks are trustless. Second, blockchain are transparently secure. They do not rely on failure secrets. The data will be secure. The U.S. Department of Defense has shown interest in the technology since last year, hosting a blockchain workshop. What are your thoughts of this? Leave feedback, comments, or just want to subscribe. Come and join a small community group. We are among friends and among here all. That is Quantum Financial. I'm Tim Brusky. Thanks for joining us today. Have a great day.